Good morning, everyone. Today is Thursday. It's March the 28th, and this is Futures in 5. We're taking a look at the charts after the release of the GDP, which revised downward a bit, showed profits a little weak, but we know this, and the traders know this. So what I've done today is put us on a little bit of a wide-angle lens. So what we have here up above us is my SMI, right? So I've got it looking here, and you can see that there's positive motion here, but a little bit of a drift down, finding support. This is going to be this line in the sand for us today. Things are going to get a little bit messier if we lose this level, and then, we'll sort of stair-step our way into these lower edges if that happens to occur. But at this juncture, it says we are range-bound into this particular space, knowing that in general, because we are bullish, this is a bullish event from a trend line perspective, certainly, you can see that our pullbacks are going to be buy zones. First pass into the area, buy zone, going to punch it up. Nothing to shove us out, no exciting news to push us forward, no drastic news to bring us down, and the overall weight of motion says that any deep pullbacks into the range are going to give us bounce passes. So don't think about anything rolling off a cliff here or tumbling off a cliff, not likely to happen. Okay, for the NQ, same sort of thing. We're looking at bullish momentum giving us a little bit of drift. What does that mean? That's a support test. And so this is old resistance. New support is forming a bit higher. So there's a little bit of an edge right there. But as we can see, that is a bullish trend. So you don't want to think about shorting this in the middle of this area. It's going to expand your risk. You want to short on the edges if you're thinking about shorting. If you say, hey, listen, that's a lot of bearish volume, then yeah, look at the edge where all the sellers are sitting, not here, where all the buyers are sitting, right? So you want to watch for that definitively. That's what we are looking for. Deep pullbacks into buy zones with support all the way down here, almost 60 points to the south. So it could fade, but it's likely that it's holding this edge right here at 73.05. Taking a look at the YM, this one, I mentioned yesterday that this one had the most room to recover and quickly. So it did that, but then gave up a ton of room to the upside. And so now what are we looking at? We can see over the last several days that what we are sitting in is a range that's giving us lower highs and higher lows. So it's building itself a wedge that it is going to eventually break out of. Now this is price compression. This is volatility squeeze. Those of you that use Bollinger Bands, you're going to see these bands sort of pulling together, and the bands will pull together when the price action starts compressing, but compressed price action normally leads to breakout of price action. So you want to watch it either collapse or break to the north. Which way? It's any man's game right now. But here's what I would say. If it breaks out, it's going to fade. If it breaks down, it's going to bounce. The nature of the environment forces all the price action back into this range. That's why it's fairly a coin toss to take a trade right in the middle of this congestion. And if you have an extraordinary amount of risk appetite, you can take it in either direction and just wait. And eventually, it's going to turn into the right edge for you. But, why do you want to do that? That doesn't make any sense to me at all. This downward formation says, listen, watch me come into known support. Once that support starts holding, I've got myself a buy zone. That's sitting here around 520. If it loses the area, you're going to have to step down into the next range. Last few days, pretty bullish, and I suspect that's a Boeing event. Okay, so taking a look at oil, I sound like a broken record, but the reason I say things over and over again is because when I say them, I know people will say, how do you know that? I mean, why are you saying that? What is that? Here's the thing. Hedge funds run the price of oil. All the speculators do. OPEC, not so much. In the end, when the rubber meets the road, you're going to have the combination of, okay, what is global supply? What is global demand? Are we coming into the stretch? But, at the end of the day, these guys say, listen, we came into 60. That's what we are anticipating. Let's take some profit. It's going to bring them into a fade. Where's the fade? Old resistance, new support. So the question is, has momentum drifted down since we saw these levels? And the answer is no. It has not. So it's still going to bounce off these edges. and it's still likely to reject the upper edge of the formation. If you sit down here, then you can look at it and go, well, you know, if I've got 30, 40 cents of a stop, that looks like a buy zone. Absolutely, it looks like a buy zone. And it's going to be a buy zone into frontline congestion. What's the one fly in the ointment? These lower highs. The lower highs coming in through this area make this a space where you have to go, maybe I wait and let it come into me all the way, so I'm diminishing risk. And then maybe I pay attention, because if it doesn't trip up and over 59, I could have myself a drift down into the next legitimate area of old support, resistance support, right? All the way back into here, and even potentially down here. Now, a lot of us are very bullish on the oil sector. That doesn't mean that it won't rotate on its way up, okay? So you want to be very careful about that. Last one, gold. Take a look at this. The never dying dollar. Looks fantastic. Bouncing beautifully, and that's going to bring gold down. But you'll notice what I said yesterday. I said, hey, I think gold's in a range right now, a little bit tired, needs to pull back. That pullback could take us, well, you know what? This is a really nice support zone in general. We can see all these wicks, resistance, and then they became support. And so if we look at that edge where all the wicks are, we've clearly broken it without a retest thus far. And so to me, that says, hey, I could potentially bounce here in this region, but if I get up over 1311, I should be all right. As this chart moves down, you're sitting under, what is this? This is a Kaufman adaptive of some kind, yes. This is a 100, and so it's telling us it's still bullish, but it could still come all the way back down here. If you, look at all the volume, if you're thinking about gold being bullish, let it cycle down into those regions that you feel that you are seeing good areas of support. I know I use the word feel, but I want you to look at this and go, yeah, that's support, right? 1287, 1291, somewhere around that zone. That's what you're going to be looking for in this deep fade. If you could see the dollar right now, it's really holding its own very, very well, and that's what's going on right here. Okay? Good luck trading today.